As we creep closer towards the end of a bear market, the battle begins to heat up. And the battle is between the bears and the bulls. The bears, the macro bears, have been right for so long, the markets continue to get dumped. But the bulls are there waiting for their opportunity to buy that dip or be the person to say that I am buying the low and then show off to their friends in 12 months or 24 months time. In today's video, we want to break down how long might this capitulation take for cryptocurrencies and how much worse could it get before the bulls are right. Welcome back to the channel. I hope you had a great Christmas. You're preparing for a fantastic New Year's ahead. Like, subscribe, bell notification. If you have been following throughout this bear market, don't go anywhere. We are the home of your macro cycle analysis on cryptos, Bitcoin, and of course the real estate market. So with that said, let's dive into today's video, break it down nice and simply, looking at time horizons here for cryptocurrencies, not Bitcoin, not the stock market today, and of course not real estate. We're looking at time horizons here for cryptocurrencies, and of course how much worse could this get for cryptos. So this chart here, it is the crypto total market cap excluding Bitcoin and ETH. And we have our custom indicator here, the investor accelerator, so TIA crypto total market cap. That's this purple line that you see over the top of the chart. Essentially, this is just taking a snapshot of the money that's left in crypto, essentially what the market caps tell us. And one of these lines has all of the market caps, including stablecoins. So this is the candles that you see behind here that has stablecoins included. And then the pink line is excluding stablecoins. So if you look at it here, it excludes BTC, ETH, and stablecoins. So at the moment, this market cap for the purple is at $163 billion, whereas with the stablecoins included, we're at around 300. So there's an approximate 135 to about $140 billion in stablecoins still in the market. So we just want to get a few levels of where we could expect the prices to capitulate to for cryptocurrencies. As I said, not including stables, not including Bitcoin, not including ETH. And then we're going to look at some time horizons here, because like I said in the intro, there's a big battle that goes on between bulls and bears near the bottoms and near the tops. And of course, at every single dump in the market on the way down, bulls are continuing to try and buy up altcoins at each of these dips, like we've seen throughout the bear market, only to see the markets continue to fall. And people, maybe new traders start to question, saying, well, it's getting low enough, maybe I should start to buy in. What I'm going to show you in today's video is that we probably still have a fair bit of time left to get our plans together for cryptocurrencies. Remember, everything I'm talking about today is referencing cryptos, altcoins, not the others that I talked about. So what I'm talking about today is we probably still have a fair bit of time to go, like we've seen in the past for altcoins. And then we still have a lot of confirmation areas, signals we could see in the charts before we have to really get going on some of these altcoin pumps, some of these big altcoin seasons like we saw at the end of 2020 and of course in 2021, probably a couple of times in 2021. So the time frames at the moment, if we throw on a couple of these lines here and some areas that we're looking at referencing back to the previous cycle, and of course things might not always play out 100% into the next cycle, but we tend to see a similar sort of pattern happen time and time again, especially when we look at the tech sector in the US, so the NASDAQ. These are sort of the patterns that we see a lot when it comes to new tech startups or any sort of new business startup into a new sector, of course. And then you often see the hopes and the dreams get absolutely deflated through the bear market, and it always takes time to build up. So speaking of time, we just want to look at some key areas here. So we have the bottom. This is the total market cap bottoming. This is through to December 2018. So this is where Bitcoin bottomed as well. And these next three little yellow arrows, these are the areas where we saw some further bottoms on altcoins against BTC, which we'll get to in just a bit. So let's just have a look at these timeframes at the moment. I've got the time frame from the top to this area right here. So it's about 406 days. The reason for that is that is the time frame that we currently see playing out for the current market cap. So you can see 406 days takes us to the current week that just closed. So that was basically just a couple of days ago here. 406 days, we're down 74% on this chart here. that takes us out to what happened in the last cycle, basically just on the peak of the market going up from that point into that first FOMO breakout. So although there was that FOMO breakout, this was in 2019, February, March, April, into the peak going into around June, the market did give back all of those gains, go on another last pump, dump into that pandemic low, and then we started that cycle. So this is the exact point where we are now in our cycle compared to last cycle. So right on this particular week here, then we started to get the 1, 2, 3, 4, 5, 6, 7 straight weeks up. That then led to a few weeks down and then that final top. I'm not saying that this is going to happen at this point, but we're getting to a time period where the market has been suppressed, depressed for basically the same amount of time as what happened in the last cycle. However, the difference here is that in the last cycle, we were putting in a higher low leading into this time frame. So there's 406 days. So there's your 406 days down from the top. This is a higher low compared to the December low when Bitcoin actually bottomed. And then we took off into that peak. Bitcoin went on the run. And of course, all the gains were given back in altcoins. So we have another piece of the puzzle to look at as well when it comes to cryptocurrencies and Bitcoin value, because that also allows us that extra patience in the market not to get caught up in the FOMO, because this will probably happen again. Maybe not to the extent of the last cycle, probably not exactly like last cycle, of course. That was around a 300% move on Bitcoin and altcoins as well, going from the bottoms here of around 30 billion to the tops here at around 90 or $100 billion. So it doesn't mean we have to have it exactly the same like last time, but we will get some sort of pump. Maybe it's going to be a 50% pump or 100% pump. I don't know, but we will get something like that because the markets have been down for so long. Will it happen next week? Who knows, okay? But the point is that will happen and we've got to be prepared for it, because we could get caught out and then just watch all of our gains be given back over the course of the following 6, 7, 8 months, like you can see from the peak here in May and June, all the way back down into the December and January lows, market up again, and then of course a pandemic. Looking at the key significant difference here, this is extremely important moving forward for the cryptocurrency market and the timing and where we could expect to see the lows in the price ranges as well, looking at support and resistance, is this higher low. Higher lows are extremely important to determine whether you're going to see the next move up or you're about to see lower prices. A lot of people don't follow this on charts, so it might come as a surprise that the markets will move up from a higher low. They just expect that when the news or the feeling turns positive, markets head up. However, taking a look at this is a really key area, that it was a higher low and then we saw higher prices from that point. Because when we look to today's market action, we are not putting in higher lows on the total cryptocurrency market caps. You can see that we just put in another lower low compared to that November low. On Bitcoin, however, it's slightly different. On the Bitcoin low, we do have a higher low forming, but it is pretty weak overall. Nonetheless, it is still a higher low, so we have to respect what's going on there at the moment. When we take a look back at the total cryptocurrency market cap, cryptos, altcoins are weaker. Technically speaking, from the chart, from what investors are actually doing in the market, they are selling off cryptos more than they're selling off Bitcoin. That's not my opinion. That's what's being said here in the chart with that lower low after the FTX collapse, the scandal back in November. So we got a lower low here. So what does that then mean to the downside? Well, we can start to throw a few more probabilities into play for cryptos to say that there's more probability of most cryptos going down further. Not all of them, as I'll show you in a few of the charts coming up. We've got a few examples of cryptos which are actually reasonable trades at the moment, going up in value, good profits to be had on those. But for the majority of them, just looking at a broad market cap here, the data is saying that the market is still trending down. Some people may find some bullishness out of this particular pattern here, drawing a falling wedge on it with the price ranges getting tighter. That is also a possibility. And I can hear the others saying, you got an up, down, or sideways answer to this one here. That is true. There's always an up, down, or sideways because you need to prepare for up, down, or sideways. The big thing is, what are the probabilities of the up or the down or the sideways so that you can best prepare with your money in the market. You have to be prepared for all sides. It's not just a it must do this scenario. We know what happens when those calls are made. 300k Bitcoin in the bull market, it never happens. 10k or 8k Bitcoin in the bear market, who knows? But if you're sitting around waiting for a particular target, you could get absolutely destroyed. So it's best to prepare for all measures. You do that in every other aspect of life. You never just prepare for one outcome. Say you're going on a holiday or camping or sports. You don't ever just prepare to take on the next team and say, this has to happen. I'm only going to be doing this particular play. You always prepare for multiple plays in sport. The same thing in war. You're always preparing for multiple plays. But for some crazy reason in trading, people expect one particular side of the equation to happen and think you're a fool if you have multiple answers for the scenario. That's my rant about preparing for different scenarios here. Of course, we then have to take one scenario and play with that for the probability outcome so that we actually take an option here. We actually take a trade in the market. So my particular stance here at the moment, my opinion, is that we're going to see further downsides to cryptocurrencies before we see major upside. And for me, a major upside is getting back towards the old all-time highs. I'm not in cryptocurrencies to make a couple 100% for some of these altcoins. They're a good trade, but if I'm looking at the longer term stuff, the stuff that I'm taking a big risk on or DCAing into, I want bigger percents than just a couple 100%. I want to see multiple X's on those, many, many multiple X's. So looking at this, we still have some further downside here. We've looked at some particular time frames as well when it comes to this market. How much further to the downside could we expect? Some simple support and resistance across to the left. You can see if we're looking at the pink line here, sitting at around 160 billion. We go to the downside for some of these areas here, some peaks, and then we can throw a straight line across. It comes out at approximately, looking at this number over on this side here, at about 80, 90, 100 billion dollars. Now that's not including stable coins. So going down another 60 odd billion dollars from this point here to, let's call 100 billion first, it's about a 40% drop. We go down to the lower end around 80 billion. That's going to be about a 50% drop. And so we draw this line up here to about 50 billion. You can see that those levels on the pink chart here start to come in at some of the lows, some of the areas that got rejected. It got rejected again in June and again in August before it found a higher low and then took off. So I like that as a potential downside in this market. So that gives us a bit of a price target for the overall market cap to capitulate to during this period. And what is that particular period? We go back to the cycle here, looking at the last period here, 2019. Even though Bitcoin did go on a bit of a pump, you can see in 2019 we had the halvening pump and then the market capitulating. So what happened last time is that we saw about a 300-day period from where we currently stand. In this case, it was a higher low in the last cycle, whereas we're seeing a lower low. So I would expect we'd probably see at least next year be pretty difficult for altcoins, even though we may see a 100% pump or a 300% pump in alts. We may see similar prices, not the same price, but maybe a similar price. But during the course of that particular pump, if we get something in 2023, then that will start to give us a confirmation that the bear is over, because the move to the upside actually outweighs any of the previous moves that it saw in the bear market. So that is a good sign, a very good signal that the bear is coming to an end. However, we still have a fair bit of time to go. With that, let's take a look at ETH, ADA, and a couple of other cryptocurrencies just to put into perspective how long this could draw down for, how long this could drag on for the altcoins. And we're looking at the altcoin against its BTC value. You got here the Bitcoin bottom. Then we have another bottom here on the altcoin. So at the time, ETH, not that I call it an altcoin anymore, but using this as an example because we have it from the previous cycle, is a bottom here in May against the BTC value. Then we also had another bottom in September, which was lower. And then we just started to get a similar bottom pattern here, but it was slightly higher in December and January. So December 2019 and then January. So from that Bitcoin bottom, we had approximately 12 months of further declines in the altcoin against the Bitcoin value, which means the altcoin was still going up in the dollar value because Bitcoin was going up. We have the December 18 low and then the December 19 low. So you can see on Bitcoin, the prices are much higher. You got a $7,000 and a $3,000 bottom, so at least a double there. But on ETH, you can see the bottom in December is lower than in December 18. So the altcoin here was actually dropping in value against Bitcoin, even though Bitcoin was going up. The same sort of pattern can be seen on ADA as well. So this was the Bitcoin bottom in December. Using those same points, using the May, the September, and the December of 2019, you can see the May low here was very similar to what the Bitcoin bottom price was at, which then means the ADA dollar value is going to be at the same gain that what the Bitcoin US dollar value would be, but the ADA BTC is going to be relatively the same because the gains are only getting met on the US dollar, and ADA is not increasing any further or faster than it was against the BTC value for that period. In the short term, yes, you could get some good gains here from the December to the March peak, but overall, it basically came back to that price, and then through into September, it dumped. So you lost value holding ADA through that period, about 50% against its Bitcoin value. Then we had the next low in December, about 46%, so the same sort of downside with ADA against Bitcoin. And then you started to go on the next move up to come back and only just get back to the previous price that ADA was at, that same sort of gain against the BTC value. So in terms of a time frame here, if we're just looking at ADA, going from that Bitcoin bottom in December to the next December bottom here, which is basically through that last bottoming process, 12 months, you'd lost 50% against your Bitcoin. So in this case, as an investor, all you need to do is buy Bitcoin and hold Bitcoin for that period if your time horizon is more than about 12 months. Then when you get the signals that the altcoin is breaking out against its Bitcoin value, just looking at the support and resistance, then you can start to flip from Bitcoin into ADA. But to make things super simple, for that period, the investor only had to hold Bitcoin through that entire period. And that entire period, in the case of ADA, going from the bottom to the first real breakout here in July of 2020, that period was nearly 600 days. Then for that final breakout was nearly 800 days. So over 2 years of a period being underneath the Bitcoin value of that altcoin. So you can really start to see that there is a lot of time left in the altcoin market. So there is some major capitulation, I think, coming based on what we've seen in this chart here. So you can see in the total cryptocurrency market cap with the lows getting lower compared to the last cycle. Sure, this could drop 30%, maybe up to 50%. With something like ADA, which is actually a much weaker altcoin, it is showing very weak signs, lower highs and lower lows. We might base out for a bit, but then continue down until we do get a breakout above some of these swing tops, basically trying to take out the tops to show some sign of strength. But at the moment, it still looks like we're on the downtrend here to about 16 or so cents on ADA. Same sort of setup here for Solana. I did say I was going to show you some of the stronger stuff, but at the moment, these are the weaker altcoins, and they're just showing it on the charts, not my opinion. I don't care whether there's a Solana bull or a bear out there. I honestly don't care. What I care about is what the chart is telling me, and these aren't looking very strong at all. You can just see the major areas of support continue to break down, and then you have to look, then you just look left to where those next major areas are, which then backs up the data in the total cryptocurrency market cap of how this could continue further down. When you see a lot of these charts with lower highs and lower lows, you have to be cautious not to dollar cost average into them too soon, because we have so much time left in the markets. Even though there could be a FOMO pump, people will come back and say, you're a fool, should have got into that, this age like milk, all those sort of stupid sayings. Then it fades out and those people are gone again. They just do not return and they get burnt out until that final pump out of the lows. Solana's still on that downtrend, potentially coming all the way back to about 40,000 Satoshis. The strong cryptocurrencies, something like Matic, it is well and truly above its June low that we saw obviously about 6 months ago now. Then you had those higher lows with a peak out here. So this is a little bit precarious because it is a double top, but you definitely want to see this market hold up at some major support levels here at a 50% or anything further back on the chart, like around 2,500 Satoshis. But at least it's putting in higher lows for this period. It does go on wild swings. So there is a lot of trading opportunity in something like Matic. Stronger altcoin, than Solana. You can see that's just a clear downtrend on the weekly chart, breaking down major support, whereas Matic, although it has some bearishness in the short term here with the double top, it's still putting in higher lows. And something else that actually was a decent trade here and that was pointed out by Michael's channel, so my brother's channel here, before it happened as a particular trade, so there are still trading opportunities in this market. You can go back here, XRP on the breakout, and it is looking slightly stronger than many other cryptocurrencies at this point in time. So from that breakout point to that current peak, approximately 5%. And of course, it depends whether you're trading on leverage or not. Not here to tell you to do it, but of course, if you do have some leverage, then it's obviously going to be bigger gains than that 5% there. Speaking of which, shout out to the channel sponsors. You got them down here in the video description. Bybit and BitGet, nearly $40,000 of sign-up bonuses. Of course, don't leave all your cash on the exchanges, but if you are trading, then make that part of your business plan to keep just enough on the exchanges to trade. And of course, you can get up to those sign-up bonuses there using those links down below. And check out Michael's channel, which I'll leave a link to in the video description as well, to get more on cryptocurrency trading. So to answer those questions about the cryptocurrency market, because there is a huge battle going on, especially at the lows between bulls and bears, and it can get very confusing out there, especially if you're new into the markets, thinking now could be a great time. These markets are down 70% or 80%, some are even 90%. How much worse can capitulation get? Things can get a hell of a lot worse. For example, Solana, going from the top down to the current prices, 96% drop. To go down to that $5 support level, it's 98% drop from the top. So technically, it's only a 2% extra drop from the top. However, $11 to $5 is over a 50% drop. And that's how the maths works out for something like the total market cap to also be able to drop 30, 40, 50% from this current price point. When we still have a lot of altcoins that are in very, very weak positions, it is no wonder that people do get caught out thinking that 96% down on an altcoin is great, but it can still go to 98% down, and it can wipe out your account pretty dramatically in a short period of time, only to see probably over the next 6, 12, 18 months, you get a grinding out period, and then the market starts to move again, probably sometime in 2024. So stay the course and remain patient, because on the downside to all of these potential losses on altcoins, we will see which coins are going to come out stronger at the end of the day. And if you are short-term trading, there's probably going to be some pretty good opportunities in that first half of 2023 to get on board with some of those FOMO pumps. So make sure you liked, subscribe to the channel, check out the links in the video description and Michael's channel that I mentioned in today's video for more crypto trading for cash flow. I'll see you at the next video. And until then, peace out.